Joining us today. I'm Ben. I'll be your host for this Q&A session with Xavier Pullen, our Director of Commercial Property. Hi there. I'm going to be asking Xavier a number of questions that have been sent in the build-up to this webinar going live. You've also got the option to add questions as we go through the session. You should be able to see a chat window for those of you viewing online. For those of you listening, feel free to send us any questions to support@propertypartners.co. If anyone's listening to this as an on-demand session, you can still ask questions in the chat window and we'll follow up by email when the session finishes. So Xavier, to kick us off, one question that kind of came through as a theme is why should investors consider adding commercial property to their investment portfolio, but more specifically their property investment portfolio?
Well, at Property Partners, we've always made a feature of the fact that investors should be looking at diversification in their investments and with specific reference as well to their property exposure. And so with residential as being our primary asset class, and then more recently introducing student housing very successfully. It seemed like a logical extension to include commercial property. And if you look at institutional investors, pension funds, family wealth offices, and all other financial institutions, when they're looking at their property portfolios, they have quite a large exposure to commercial property. And it's really been a chosen asset class. As private individuals, however, it's very difficult to access this class. There's sort of quite a number of barriers to entry. And so one of the exciting things at Property Partners is being able to access this asset class for the benefit of our investors in a way which is in addition to what they've already got.
So as an asset class, many people turn to it from an income-producing perspective to their portfolio. But as you just briefly touched on, accessing this asset class as an individual investor can be fairly complex. It's fairly niche. A lot of our clients obviously have experience buying residential properties directly or investing in residential properties through our platform, and more recently, over the course of last year, investing in purpose-built student accommodation on our platform. They're all relatively familiar asset classes, whereas commercial is a bit more niche. What are the key aspects that an investor should look at when deciding to invest in a commercial property?
I suppose that if you look at any selection of an investment, particularly property, you're looking at sort of location in the main, and you're looking at and the ability to create income, and you're looking for the potential for capital growth down the sector. It's exactly the same with commercial property, except in commercial property you've got the benefit of being able to secure a long line of stable income onto a long lease, where the tenant is responsible for all the necessary repairs, both internally and externally. And so from that point of view, it's a cracking asset class for those who want income and they want to have a more hands-off approach in terms of the asset. So what we've been able to do is we've been looking at the potential to add investments which have exactly that dynamic and deliver them in a unitized form in the way that Property Partners can do, which is pretty unique.
Great, thanks, Dave. Just going into a lot of the questions that we've had are really related to the newest investment opportunity on the platform, which is a couple of retail units in Weymouth. It'd be great if you take us through a bit more detail about that specific investment.
Okay, so this follows on from the Sainsbury's local that we put on the platform just outside Leamington Spa. This convenience store sector is a sector which has become very favoured by the big supermarket operators, moving away more from their big out-of-town stores and where people used to go on a mammoth monthly shop, where they can get that now more online and have those bulky items delivered to their house, and where the residents now can sort of visit their local store, which is a more pleasurable experience, and then book on in the car, and we can and top up that shop, and the supermarkets have been, very keen to expand in this sector. Both Sainsbury's and Tesco have come out with statements recently where they openly talk about, their expansion in this area. So it's a growth area, and that's a good backstop to any commercial investment. You see the tenants very keen to sort of expand into this sector.
Yes, definitely. So the latest convenience store on the platform and the Tesco's. What's the key aspect of this investment case?
Okay,
well, made it stand out to you?
Yeah, well, I think first of all, Weymouth, it's in the south. It's based in the southeast. Weymouth is a particularly attractive area. It's an area of outstanding natural beauty. It's along from the Jurassic coast down there. It's got the dynamics of all the sailing. It was improved substantially following the Olympics, where they featured the sailing activities down there from the Olympic Games. So the area is an expanding area, and it's a year-round sort of holiday sort of destination, being such a special position. Getting planning consent in these areas is extraordinarily difficult, and what this local developer contractor has been able to do is secure this development. So it's a brand new development, which is great. So it's got the dynamics of being in perfect condition right from the start, and the leases will all be all brand new leases as a natural consequence. And in this particular case, we've got Tesco on a 20-year lease, and with 15 years certain on a full repairing and insuring lease. So, and in addition to that, the rent is indexed on RPI compound every year. So it's got a cracking characteristics.
And that really stands out versus investing in residential student, where your tenants might change more frequently, and you've got maintenance costs as well.
Well, that's the thing. So it's from that point of view, this is a net yield. So the only thing to look forward to is a rising level of rent geared to inflation, and of course that's quite a difficult thing to achieve, and with a particularly strong covenant as Tesco and Subway, you've got a real high, you've got a very good solid income investment.
A couple of questions actually coming in on the back of that, Dave, in terms of, I know the answer to this, in terms of a property partner, the property team will always visit every site with an investment opportunity, if not once, multiple times, but specifically, have you visited this site, and kind of what other aspects can you share from that visit?
Yeah, well, I know the area very well indeed, and of course I have visited the site, and met with the owners and their advisors. It's well out of the ground now, this development, and if you like, you've got these 2 retail units on the ground floor, and you've got four brand new attractive residential units above, which they will sell off separately. So our investment is just secured on the retail units on the ground floor. As I said, let's see Tesco and Subway, and on completion of the buildings, which will be in a few weeks' time now, these will be handed over to the tenants for their fitting out.
And both those leases are signed then by.
So both those leases are signed and all agreed. They're held under what we call an agreement for lease, and as soon as the developer has completed them to the required specifications, they'll complete those leases, go in and fit out.
Okay, thanks. Great. There's a few questions just in terms of the state of the retail economy. Now, you touched on this briefly already, and for anyone listening, if you go to Property Partners blog, you'll be able to see Dave and his team's acquisition strategy for retail that covers this off in a bit more detail. But for everyone listening, Dave, what's your view on the state of retail at the moment? Obviously, it's something that we read about every day, and your strategy to kind of overcome this from an investment perspective.
Well, it's certainly challenged, that's for sure. The high street's under some stress. It's really strange actually, because obviously you've got some retailers who do very well on the high street, and are not as effective as a number of others with online. It's certainly going through a change. It's an area which, although I know quite a lot about and would be quite happy to sort of to invest in, you've really got to be very, very selective about it, and you've got to be prepared to sort of step in and actively manage the investment. That might be something down the road we might put to our investors, but that would be at a completely different yield profile and all the rest of it. In this particular case, we're away from the established high street. These are in local residential areas, and they've got considerable demand for, as I said before, this local shop, where it becomes more of a feature for local community. You get your local newspaper, you get like newspapers there, you get fresh bread and all the rest of it. This is where the food retailers are really concentrating their efforts. So to that extent, it's sort of it's away from that risk.
In terms of this particular deal, a few questions coming in regarding the exit mechanics. Just broadly speaking, on Property Partners platform, we will always detail the exit mechanics for each individual investment that we put on. But in terms of your view of commercial on the platform, what do exit mechanics look like in terms of how we would kind of liquidate that asset in the future?
Well, I mean, certainly I've got another key aspect of looking for something which is suitable for our investor base and platform. What we've got here is a 15-year lease certain, with 20 years with a tenant option to break at 15, which they may or may not do. So 15 years certain, and the rent is indexed with an indexation of RPI. Annually compound. It's annually compounded, and it comes in at every 5th year. So there's no argument about what the rent's going to be. It's only ever going to go up, or certainly not. But it won't be going down. And if inflation is zero, then obviously you'll continue to receive the rent that's required under the terms of the lease. As I said before, it's full repairing and insuring, so there's no repairs to worry about. The tenant's responsible for all that. And so you can rely upon this sort of rising level of income. So at the end of, say for example, we held it for, say, I don't know, 3, 4, 5 years, we were able to offer this investment with 10 years plus remaining, and an imminent rent review that's going to come in relative to the inflation over the previous 5-year period, say, and he's got another 10 years certain to take advantage of this investment. And what I've been seeing is that these investments, because of what's been happening in high streets and other commercial investments, leases have generally become shorter. So in office space, for example, people want shorter leases, and retail, they want shorter leases. So in this particular case, we've got a nice long lease, and with fixed increases. So you've got a I perceive that there's going to be an ever increasing demand for these kinds of investments, and to be able to access it in this more modest way is going to be still very, very attractive.
So in short, a fixed income product as such, and the opportunity to sell that for to an investor in the future at some point if the conditions are right to do so.
Yeah, absolutely. Yeah.
Just to wrap up, I think one question that I've just seen come through is someone asking, what does the pipeline of deals look like for commercial?
Well, we're getting up quite a lot of investments. I mean, because of the drive for these investments, they're actually few and far between. And when they do come on the market, they go very quickly. There's the conversation on these investments. One of the aspects is that because in commercial terms, in institutional terms, this is quite a modest amount of money. It really only appeals mainly to private individuals who are wealthy enough to put in a 2 million and organise their own hearing and all the rest of it. These are highly sought after in that area. So my feeling is that we're going to continue to concentrate on this area. Meanwhile, looking at other asset classes within commercial property that I get offered from time to time, and I think that there's although it's difficult to find them, we're certainly getting offered them.
Thank you for your time today, Dave. I think we're going to have to wrap it up. I think we've covered most of the questions that have come through, so apologies if we didn't get to any in the session. We will follow up with any that we've missed by email afterwards. We've touched on it a few times, but there's a lot of educational material that Xavier's helped us prepare on Property Partner's blog, propertypartner.co/blog. If you do have any more questions, obviously feel free to get in touch at any point at support@propertypartner.co. But thank you for joining us today.
Yeah, thanks a lot.